Hello traders, welcome to another daily analysis. Today is January 26th and we're right now at 7:37 p.m. Eastern Standard Time. So yesterday the CPI data from New Zealand was largely very positive. It was almost a deviation. Now, that has really completely removed the easing concern for RBNZ, at least for now, which also removed the further rate cut possibility. Now, on top of that, many of you might remember also came out this week is the Australian CPI, which did not come out strong. It was actually quite soft. So that put Aussie in a quite negative position in comparison with New Zealand dollar. So New Zealand dollar is really the strongest currency since this data. So fundamentally speaking, it is one of the strongest currency. But of course, if you're looking at the technical aspect, it has been largely bought already. So both New Zealand and Aussie, of course, are all benefit from the current risk on sentiment. As you know, that Dow has hit 20,000, and today we continue to climb higher. So that's really the big picture right now. And tomorrow is Friday, so most likely we might see a shift in the sentiment, because in Friday most traders like to wrap up their position. Some of them will just take profit. So on Friday, most likely you might see a sentiment shift, which turn into a more risk-off sentiment. That, of course, is going to pressure Australian dollar and New Zealand dollar. On the other hand, you might actually see another new high. The truth is that nobody knows, so we have to see what happened. The Tier 1 data in London session was the preliminary GDP for UK, and it was actually quite positive than expected. It was in line with previous. So back then, a lot of economists has predicted a lower GDP. Now, the main reason for the GDP to drop in UK, of course, comes down to after the Brexit, the currency completely devaluated. So what that did to the UK is that because the currency becomes so cheap, so every product basically become more expensive when they have to import material. And when product become expensive, then will reflect in the price, which also deterred consumer to buy products. So that was the logic. That's why people think after the Brexit, UK might actually enter into recession. But that did not happen. On top of that, not only that did not happen, UK actually had a quite promising year in 2016. The GDP growth is actually faster than Germany. So of course, that's just something you have to take into consideration, that a lot of time the economic theory does not reflect in reality, right? Because there is always an element of irrationalities into the human behavior. So it is what it is. What happened right now, what we see is that UK continue to be strong in terms of their GDP. And the GDP really comes from their consumption. So the consumer spending is about 70% on their GDP. What's going to happen is really we'll have to see whether the consumer can continue to shop regardless of the price going higher. Now, price going higher, the inflation is a reality, because the last inflation report, we already see a higher than expected number. So because of the pound devaluation, the inflation is most likely a fact. Now, what's unknown for us is that we don't know whether a higher price will discourage consumption. And now, usually in theory, of course, when you have a higher price, you have a lower demand. But again, that's only in theory. So we don't know whether it's going to happen, or even if it happens, we don't know when it's going to really reflect into the economy. So as for now, because of this preliminary GDP, pound remain to be very strong, both sentimentally, and right now even the fundamental has supported this sentiment. The further push will now comes from the Brexit. Right now, as you know, it came into the parliament, and they are going to debate, which I find is kind of funny. But anyway, they are going to debate about the bill. So it just a bigger picture is that right now the Brexit will kind of drag out. Okay, it will kind of become it's not gonna be a headline anymore, and the reason is because you have to go through Parliament. Now, Parliament is a place with so much members, so really, think about think about in the politician's point of view. It's like nobody is going to do any drastic movement or decision. Right now, it's going to the Parliament. You're gonna have a long period of debate, and you're gonna have a long period of voting, and then maybe amendment and things like that, and then finally you can trigger Article 50, which supposedly the deadline was March. That was according to Prime Minister May. But right now, the decision is not on her hand anymore. So that's why I say expect the thing to drag out a little bit. So it's not gonna be too excited. It's just gonna be, you're gonna have a news day to day from Brexit in Parliament, but it's not gonna be a headline. Now, if it's not gonna be a headline, then pound will pretty much continue to go up to a certain level before it being sold again. So it's really that's the a future projection right now for British pound is that it might continue to go up, but watch out again for the important levels such as 1.28 and 1.30 will all be very important. Other than that, we don't really have a tier 1 data for US today. You have the unemployment claim, which came out a bit negative. And you also have a new home sale, which also came out a bit negative. Not something that's a tier 1 data. And I wrote here, so later on we have Tokyo Core CPI and National Core CPI. Actually, that came out already. Both are quite positive than expected, but did not provide too much sentiment. Now, the reason is because there's really no way for Bank of Japan to tapering their bond buying program anytime soon, right? Because Japan is still in a deflationary environment. So this core CPI, national core CPI, of course, it came out better than predicted, but still does not mean anything for Japanese yen. So Japanese yen is still remain as a reactive currency. That means that it does not act on its own economic data. Rather, it react to whatever happened to the sentiment. And as for now, because the sentiment is very positive, that of course diminish the Japanese yen even further. And that's pretty much what happened to the market. Tomorrow we will have advanced GDP and core durable goods for US. And both are tradable events, but it's really not going to do too much for the US because one piece of fundamental data is not going to change the outlook for Federal Reserve. What's driving US dollar right now is really from the Donald Trump policy. And that's why it actually will become, the sentiment actually surpassed the fundamental for US. Not because some fundamentals is not important, just because the series of fundamental data are all sort of within the line of expectation. So no more data for people to worry that the fundamental is solid. The Federal Reserve is looking to raise the interest rate. Right now, the uncertainty, the risk is really Donald Trump's policy, and right now the protectionism stance that the US have. So for Euro, although many worry for high inflation, but today we have ECB come out again saying that the QE is basically what ECB is trying to do is right now you have a lot of objection from different European nations wanting ECB to stop easing, to tapering as soon as possible. And the reason they do that, of course, because the nation which have this objection are most likely in Germany or France, where their economy is doing well, the inflation is picking up. They don't want the saver, the people who save a lot of money, the pension, they don't want the saver to lose their money. Because if you have a low interest rate market, really you don't make any money by saving. However, as the ECB mentioned that Eurozone is a big family, so they cannot really just amend a certain rules because a strong nation wants them to do that. So ECB is quite firm on their stance. What does that mean is that Euro it will fundamentally remain weak unless ECB start doing something. But aside from that, Euro will continue to be a fundamental weak currency. On top of that, right now the sentiment does not help it either. because right now the sentiment is a risk on sentiment, further punish the euro's safe haven status. So that's what happened to the euro right now. For dollar, as I mentioned, exactly the same. You have a fundamental strength with sentimental weakness. Right now, the sentimental weakness has removed a little bit because it's already Thursday. We are officially almost past the first week of Donald Trump, and right now, whether you like his policy or not, one thing for sure is that he is following his election promise. So the pattern we're seeing right now is that he is actually following through what he said he's going to do. During the election, a lot of people think he is crazy, that he's not gonna do anything he says he's gonna do. But right now, at least for Thursday, right now we think the past 4 days, a lot of policy has actually been quite congruent. So if this pattern remains, that means he is really going to remove the banking regulation. He is going to change the fiscal policy and have a further tax cut plan. That means the economy is really going to be heated up, maybe perhaps overheated up, and that will make Federal Reserve to tighten interest rate faster, which further tighten the market, which further increase the value of US dollar. So US dollar is looking quite well because of that, if the direction continue to go in that way. So that's the presumption for US dollar. For Canadian dollar, oil market climbed up today, but not because any major news. It's really due to the stock market making new high. Canadian dollar still remain up in the air, and you really have to see the future of North American free trade deal, how that's going to pan out with US. As for now, it's a currency that's more like a neutral. I don't want to touch it because I don't know which direction it's gonna go. British pound, as mentioned, it's quite bullish sentiment and bullish fundamental right now. That next week we will have a lot of central bank decision. We'll have a Bank of Japan, Bank of England, and Federal Reserve. All expect to be unchanged, but watch out for their stance on the future projection. For Australia and New Zealand dollar, as mentioned, both are benefit largely by this risk on sentiment. You just have to be careful if you're doing any sort of day trade that tomorrow the sentiment might shift. So be careful. And it's very natural and normal for sentiment to shift on Friday. It's generally, if you have a quite good trading week for Monday to Thursday, then Friday naturally a lot of people want to take off their profit. And on the other hand, if you have a very negative trading week, then also on Friday a lot of short sellers will want to cover their position, which you will see a lot of buy order to push the market up. So that's just the nature of market. Generally, you see a different reaction on Friday. But on the other hand, you might not see that. Nobody knows the future. That's why it continually trying to emphasize that. So all you can do as a trader is really protect yourself. For Japanese yen and Swiss franc, both currency, of course, has taken the heat from the current risk on sentiment. And we'll expect to react to the stock market direction in opposite way from now on. So that's pretty much it. So tomorrow, again, you have advanced GDP and core durable goods for US. Both, of course, are tradable events if you have something outside deviation, but it's not something that is going to change the fundamental picture. Unless really something terrible come out. Otherwise, if it's within the range, then it's really not something going to change the outlook for Federal Reserve. Now, I keep saying that is because the first meeting is next week. So, of course, anything happen between now and then are all quite important to take a look at. Okay, so let's take a look at our trade. So first thing first, I am still in my Aussie yen trade, and as you can see, it worked out quite nicely. So I'm still holding it, set to break even, and tonight we have a quite positive PPI data from Australia. So I was hoping that maybe that will further boost Australian dollar. Don't forget, yesterday was a holiday for Australia, so we'll see what happened right now. And but anyway, it's in the break-even position already, so we will see what happened in this trade. Now let's take a look at our current daily trade. So right now, first thing first, Euro New Zealand is we are holding this for quite some time already. We got in here at January 11th. Right now it's January 27th. So about 16 days, 2 weeks of time. Really a lot of consolidation in between here. Now we continue to go down. What I'm gonna do here is really nothing much. I'm just going to keep holding this trade for the simple reason that I think Euro New Zealand is really still going downward. So I'm still holding it because this is more like a long-term perspective. I'm still holding it because this week the New Zealand CPI has proven to give New Zealand dollar a very strong fundamental boost. And meanwhile, ECB continue to reaffirm their stance on the easing. So fundamentally, this is still a trade that's looking to go downward. So of course, I could tighten up here and there, but for me, it's really not much differences. I do want to see it goes lower before I change my stop loss to anywhere here. Okay, so second trade I have is New Zealand yen. I got in yesterday, and with this, actually the green candle previously, but today, of course, we have another bullish candle. Now, I definitely expect this thing to reverse a little bit. Okay, that's just the nature of market. So I do expect this thing to go up eventually, but I do expect this to come down a little bit before it takes off. And that's why I leave such a wide stop loss in this trade, because I do expect market maybe to give me a little bit consolidation again before it takes off. But as I mentioned, this is more like a fundamental trade, so I give it quite long-term outlook to hold this kind of trade. Okay, so that's the two daily trade I have plus one intraday trade, and don't have anything aside from those. Let's take a look at our 20-year currency pair. I actually have two signals today. Let me just talk about those things. First thing is euro dollar. So euro dollar, as you can see, not only you have this solid bearish engulfing candle, also it's because it's coming up at a very nice area, somewhere I really like, which is here. So as I mentioned that I am looking forward, as mentioned before previously, right, beginning of January, I say I'm looking forward to sell euro if we can have any sort of signal at this area, and we did have this signal coming up today. So for that very simple reason that fundamentally dollar is stronger than euro, sentimentally it's uncertain for both currency, because if the risk on sentiment continues, that's not going to help US dollar, but that's also not going to help euro. So that's sort of hedge out each other. Now things, again, as mentioned, always revert back to the fundamental eventually. So that's why I take this trade, because I do like the position of the signal. I do like the zone. So for me, the only thing I need to make sure is to have wide enough stop loss and be patient enough to ride this trade to a lower area. That's just a very simple logic. Of course, I don't know what's gonna happen. Maybe it's gonna stop me out and keep going up. That's fine. I'm just gonna re-enter at an even higher area. And the other trade I have, also a dollar trade, is dollar yen. Again, we got in here prior to the inauguration, and then this is before the inauguration. Then we didn't the inauguration day, and we didn't like what we see, so we just get out to avoid any very negative resentiment from Donald Trump's first week of office. And actually, it was fine during his first week of office. Nothing really crazy came out from him. Everything was actually as expected. So that's why you sort of have this kind of movement right now. So that's why I decided to get in again right here at this green candle, and it just stop loss just below here. Now, of course, this kind of trade, it's a fundamental trade, and right now the sentiment, of course, also help us. But remember, there's always risk inside. Especially, I'm taking this trade ahead of risk events tomorrow, the advanced GDP. The reason I do it again, because I hold on a quite long-term perspective that I don't really care. I don't really care about a single fundamental data. I don't think any single fundamental data is going to change the outlook for US dollar. Those fundamental data is tradable for intraday trade, but it's not gonna change a fundamental outlook. So because of that, I do like this kind of area. So between 115 to 11250, it's just a really nice area to resume this uptrend movement. Again, we don't know whether this is gonna take off here or maybe it's gonna continue to go down. That's just a risk you have to bear if you want to take basically any trade. But for me, it's very simple. I like the signal, I like the area, I also like the fundamental picture, and I also think the current sentiment helped US dollar more than Japanese yen. Tomorrow everything might change, but not the fundamental. That's why I take this kind of trade. Okay, so that's the two trade really I have, but let me still show you the other thing. So let's take a look at euro. Euro pound continue to go edge lower, but just be careful that 83.75 you have this strong 200-day moving average, which might provide a very strong support. Euro Swiss, on the other hand, had a huge drop today. I don't know why, to be honest. I don't know why Swiss franc has gained such a strength. Let me take a look. Maybe it's coming from fundamental. So Swiss franc yesterday has a trade balance which is actually negative. So I don't know why there was a such drop in Swiss franc. We do have the euro meeting today. Maybe that's play some effect, or maybe just a profit taking. Euro dollar, as we saw this already. Euro Aussie is kind of indecisive. Euro CAD continue to drop, and Euro New Zealand. WTI went up today, so that's why Euro CAD dropped. Euro Yen, also really nothing much happening here. Pound Swiss franc is again very indecisive, small movement. Cable continue to edge higher. Now, if you look at pound pair, you know that it's very obviously that pound is still edge higher, same as pound Aussie, pound CAD, pound New Zealand, and pound yen. The only thing is that you can sort of tell that the movement has become even smaller and smaller. So again, whoever wants to buy British pound always have this concern that because the majority of traders, a lot of people are still looking to short British pound. So that's why whenever you have a downward movement, it's always a big candle. The upward movement is always a small candle. It's kind of like indecisive movement here. So today we actually climb up to this 200-day moving average, which is a very good signal for pound yen. We will see what happens if we're gonna go up to come down to give us a sort of last case movement to establish a support on top of the 200-day moving average, or we might have this kind of movement where you soon going down off this 200-day moving average. So we see what happened to pound yen. Swiss yen, again, really nothing to talk about in this pair, fundamentally or sentimentally. All you can see is that Swiss franc is getting better momentum than Japanese yen. Dollar Swiss continue to go into a sideways movement. Dollar CAD also a sideways movement today, and dollar yen, as mentioned, a solid green candle. Aussie Swiss also a sort of sideways movement. Aussie dollar. Now, if you put a pending order yesterday, you will not get filled. So maybe you could cancel it. On the other hand, you do have an inside candle right now. So Aussie can still be a quite nice currency to buy, especially when versus US dollar. If the sentiment continue to be strong, of course, eventually Australian dollar will also be benefited. You just have to be careful because of the soft CPI from Australia, that there is, of course, a chance for RBA to cut interest rate on their next meeting. So that's something you have to be careful. And also be careful when any fresh new buyer coming to US dollar. As mentioned, US dollar has this fundamental buying strength, so you just have to be careful. But for now, Australian dollar is still kind of stronger than the US dollar. Aussie CAD continue to drop because of the strength into Canadian dollar. And Aussie Newsy also continue to drop. You do have this kind of reversal signal. But again, for me, it's just not, doesn't mean that it's gonna go up, right? It just means it might go sideways or it might go up a little bit and keep going down. What's most important for me is the fundamental picture behind these two currencies. And right now, New Zealand dollar does enjoy a better sentiment and a better fundamentals than Australian dollar. So that's why it's not a currency for me to buy. Now, Aussie yen, again, in this small triangle here, I didn't draw it for daily, okay? This is for hourly. But nevertheless, you could see that, we might break out above, and that would be great for our trade. CAD Swiss. CAD Swiss have this kind of trending kangaroo tail, trending hammer. You could keep going higher, but I don't want to touch Canadian dollar right now unless I know what's going on to the North American free trade deal, because that's really going to be a big driver for Canadian dollar from now on. Same as CAD yen, not something I want to touch. New Zealand Swiss. Now, New Zealand Swiss have this huge bearish kangaroo tail, which also touched this kind of resistant area. Now, technically speaking, of course, it's going to reverse and going down. But fundamentally speaking, it's completely opposite. It should keep going up. So that's the thing you have to really take into consideration. Nobody says the price will reflect to the fundamental. It will eventually, but you will always have this. Maybe it's gonna react like this. You have this kangaroo tail. You have 1 day of retracement and then continue going higher. It's very possible. So it really depends on how you trade it. A lot of people like to counter trade. There's definitely nothing wrong with that. For me, I don't like to take daily trade that against the fundamentals. So it's not something I will be considered. New Zealand dollar, exactly same picture. You have this strong kangaroo tail, strong inverse hammer. So technically it will reverse. We just don't know how long or how fast. For me, I probably want to buy New Zealand dollar back if we have a nice reverse, only to give us another buying signal. That's more like my game plan. New Zealand CAD is same thing here. You have this reversal signal. For me, this is really a profit taking because New Zealand has been going up for so long, since beginning of this year. So a lot of people are really taking their profit, and a lot of short-term traders actually got in because of yesterday's CPI. So they got in, they make some money, and they take off their profit, and that could be another reason. New Zealand yen, this is a trade I got in right now, just to show you how weak the Japanese yen is right now. So this one, it does get feel, but like I say, I do expect a little bit retracement before it takes off again. So that's just something you have to take into consideration. So just to recap, New Zealand yen is the one I currently have. Euro New Zealand is the one I'm in for quite some time, already in break even. Two pending order will be dollar yen long and euro dollar short. And my current trade, intraday trade, is Aussie yen. I'm looking to trade tomorrow the advanced GDP for US dollar. And but if I'm already in, if I'm already in this euro dollar or dollar yen trade, then I'm not going to trade the risk event for tomorrow. Or if I do, I probably pick something else. I maybe trade cable or dollar CAD. But that's only if the advanced GDP or core durable goods, actually just advanced, I'm not going to trade core durable goods. So only if the advanced GDP is a deviation outside positive or negative. Okay, guys, that's it for this week. Really not too excited, to be honest with you. Quite quiet for this week comparing to last week. Last week you got a really huge roller coaster ride due to British pound. However, watch out for next week because next week is quite exciting. You have Bank of Japan, Bank of England, you have Federal Reserve, you also have non-farm payroll. So really a major risk event week for next week. So, if you don't have anything to trade this week, that's fine. Take a rest, and next week is another new week. Okay, so I'll be back tomorrow with Friday daily analysis. And other than that, if you have any questions, feel free to let me know. Thanks for watching. Bye.